Hey guys, welcome back to the channel, and today we're going to be breaking down my buys and sells of stocks in May 2026. So there's going to be some with small deposits, realistic goals, and showing you a portfolio that grows one step at a time. Now, if you do enjoy videos like this, of course, leave a like, hit the subscribe button, and comment down below which stocks that you have got that possibly I have got too, or if there's any stocks that I haven't covered yet and you want to see on this channel, then of course leave that comment. Now, this isn't financial advice, it's just a personal journey, and hopefully it helps you build confidence in your own investing. Remember, investing does involve risk, and please do your own research, because sometimes I might not be right. This is just me doing my own portfolio, doing what I've learned, and I'm still learning at the same time. So, before we jump into this, there is a Robinhood opportunity down in the description where you can actually get your shares up to $175 of stock once you sign up onto Robinhood and do your deposit. Now, this is a great opportunity for people who haven't started investing already and just want to, get some free opportunity to see what investing is like by doing a small deposit and get an opportunity to get some extra shares. So I always think that's a good opportunity. Make sure you hit the link down in the description and get your shares today. So, there is a few sales this month. I know, I am gutted, but it is what it has to be. So, I actually started May with a couple of sales with Booking Holdings and UPS. Now, I am disappointed to let the Booking Holdings go because I do like the stock. I do like it before it stock split. I do like it now. But the problem was it was on my Intorio Invest account, not the stock and share ISA. It was on the Invest account. And I did email them. I did try and contact him. It took forever to get hold of him, unfortunately. Then when he did, they said they couldn't transfer over the portfolio to Trading 212. Even though Trading 212 said that actually they could do, but it's up to them. Unfortunately, they didn't allow it. So, unfortunately, I sold Booking and UPS because Intora's new AI direction doesn't match my long-term investing style. Because why do you want to try and do all this fancy stuff with AI and all these bots? I'm not building bots. I want to build a simple portfolio, and I think that's what Trading 212 has really opened my eyes up since going onto that platform. Is that it's so accommodating for investors. So I just thought it was the right time to just move over, trying to simplify my workflow, moving everything into one platform. Now, just to note, I have left my big carnival position on there, my pets at home and meta position on there, only because I just think those stocks are going to go up. I think as well, carnival, because I'm so heavily invested in carnival on Toro, I just don't want to sell it and lose the opportunities that I do have on there. And I think if I do decide to invest on Toro again, it will only be in the carnival position. So let's get into nitty details. So we did got the small gain from Booking. It was only a $1.81 gain. UPS we did take a loss of $167. So not every sale was a win, but cleaning up the portfolio to me matters a lot more. So let's go through each stock now and why we've brought it and what role it's going to play in my portfolio. So as we already know, if you haven't seen the video already, there is me doing a challenge of doing a Vanguard S&P 500, which is the VUSA, and the Main Street Capital. I'm going to try and do. It is saying $2 a day challenge, but at the minute it's just spare cash. It's just showing what spare cash can do. If you've got 10 quid lying around, you've got 20 quid lying around, you just don't at the end of the paydays, or when you get your new payday, and you go, what should I do with this? I've already got some money saved up, or I don't have any money saved up, and you go, I just see this invested. This is what it's going to show. So as we can see, I put in another £24.54 quid, which got us 0.237 shares. I'm not going to read out all the little numbers. So that makes it up now to a total of 0.419. The total vested is 42 quid, but it's actually valued at £44.84. The reason why I brought this is because it's the backbone of my long-term challenge, Pi. It's got diversification across the 500 biggest US companies, low fees, reliable performance, average nearly 10% yearly returns, and it's just perfect for small, consistent contributions, which is, to me, very good indeed. And as mentioned, we have got Main Street Capital. Now, the reason why I brought this was because monthly dividends is perfect for the income compounding over time. It's one of the best business developed companies, or BDCs, with a strong track record, and it's just going to help with the balance of the growth heavy VUSA. Now, it fits my 50-50 pie strategy very, very well. Once again, because it's half and half, we got the same amount in, which was £24.54, which got us 0.60 shares. Now that means we're just over 1.03 shares invested now into Main Street Capital. Total invested is actually 42 quid, but we're actually down on Main Street Capital. It's actually valued at 39.6, which is a bit of a shame. But like I say, progress takes its time. Not everything goes up in a straight line. It goes up and down. But like I say, we'll get to this part of the pie later on, where if you guys want to copy it, it will be a link down in the description where you can do it yourself starting today. And of course, we've now opened up my first utility stock because, for me, I like diversification across all ranges. Now, I know the ETF does cover utilities, but that's for America. And I like some UK exposure. And I know people are going to probably comment saying that, well, there's loads of other different countries and all that. I do know. But I think at the minute, just because, I'm from the UK, I kind of want to try and keep things a little bit simple, but trying to go and explore some good opportunities. And I think, Centrica is one of these opportunities. Now, it's quite a small position as such, because I think, it was on a discount for me. It was in a range that I want to buy it at. So we bought 2 shares of that. Now that equates to £3.86. And it's actually valued now at £3.75. And for me, people always need energy. It's a small position at the minute to diversify into more UK companies and take advantage of the no withdrawal tax for me. And of course, following the trend, we've got the big yellow group. For me, self-storage demand will always keep rising. Strong UK brand, and of course the REIT, the exposure, add stability and dividends. So for me, their business model, for me, performs well in good and bad markets. It's also on massive undervalue. I think it's actually down by 20% or something like that. Not 100% sure, don't quote me on that one. But at the time of investing, it was quite down. And I thought this was a great opportunity to invest, especially with some of the money that we got from selling UPS and Booking. So one share, so that is £8.46. It is down slightly by £8.39, but I still think this is a good opportunity to buy in. And one that we have covered on the channel is waste management. Now, it's a small position, but it is in on another pie of mine, which isn't public. But if you guys do want me to go in more into detail of it, then of course I will do so. But waste management, we covered before, but I'll go over a few key points. For me, this is one of the most recession-proof businesses on earth because, we always chuck our garbage out. But if we haven't got anybody to do the garbage, who is going to get rid of all our bins? That's what waste management is going to do, because waste collection is essential. It's a long-term compounder with strong cash flow. So even if tiny fractional shares at a time, it still gets me exposure to a world-class company. Now, we are in a 0.0089 of shares at £1.50 invested. It's actually down quite a bit, but because it's only a small position, it's actually only a total value of £1.41. Another company that we have also featured on the channel is Legal & General. Now, why I brought it, like I say in the videos, it's one of the most UK's most reliable dividend payers. Strong yield, but it's also got one of their best portfolios with a long-term pension and insurance giants. And especially with what they're doing, I just think it's one of the greatest stocks to buy. And especially as well if there's a takeover bid that does come and do take them up. It is undervalued massively to what it's expected to be brought at. So this is a good opportunity to take some profit if it does happen. If not, I still think the fundamentals of the company are worth invested in. Now, by the time I invested, I got 0.844 shares. total amount that was £2.27, £2.25, sorry, and the total value is at £2.29. So up a little bit, but like I say, we've got small positions. If it goes up by like 9% or stuff like that, it's only going to be small. But that means the compounding over time of us to keep investing and investing in these positions just means we're going to get more out of it in the long run. Now, this is going to be one of my favourite stocks, especially for what I consume in, and that is Monster or Monster Beverage. I do have a lot of these. My partner has a lot of these, and we love them to bits. And as one of the quotes say of people that invest, always invest with stuff that you kind of know. And to be fair, I didn't actually know what Monster Company kind of really does, apart from the drink. I just kind of thought, oh, it's just a really good energy drink. And I did a little bit of a deep dive, had a look at researching and all that, and I found that this company was quite good indeed. It's a stock that I kind of wish that I kind of found earlier on in my life to actually gone and had a look in deeper instead of just consuming their products. But I had a look, and I think it's just worth investing for what the fundamentals of their company are. Now, we only got 0.03 shares. Once again, £2.25 invested in it. It is actually valued up only by a pence, but £2.26. Now, like I say, the reasons why I brought it is because it's one of the best performing consumer stocks as well in the last 20 years. It has got a lot of global brand power, especially with Lando Norris, one of the sponsors. I love watching Formula One. And it's got high margins and strong growth indeed. And moving on is Tesco's. We've recently featured them in a video. Now, why I brought them was one of the UK's biggest supermarkets. They're a defensive stock, and they do consistent dividend payouts. Now, I did get 0.966 shares. This was for £4.50, and it's actually down to £4.16. So not great indeed by Tesco's, but that ain't going to stop me from shopping there. But you know what? I think Waitrose is rubbing their hands together and go, come on, come over here. But I don't think I'll be like my mother, and I will definitely be shopping still at Tesco's. And another one that I think featured early on in my channel, but haven't really seen since. But I've been keeping an eye on them, and that is Dutch Bros. They were actually at highs of like $80 to $90. They're actually back down to like $57 to stuff like that. So for me, that is best time to add into a portfolio. So we've got 0.11 shares. Total amount was £5. That means that, like I say, it's only a small position, but it's actually up. We've got £5.07. And the reasons why I kind of like Dutch Bros, even though we're a coffee chain and people say there's so much coffee chains out there, like Starbucks, Costa Coffee, Cafe Nero, list goes on, like 200 Degrees. Fast growing US coffee chain actually falls to Dutch Bros at a minute. In my opinion. That is my opinion. But I definitely think that Dutch Bros is one of the fast growing US coffee chains. They've got a good, strong brand loyalty. And they've also got an early stage growth potential, especially with their expansion coming to the UK, which I'm hoping they do, because I would love to be at Dutch Bros, because I have some American family. They do like Dutch Bros, but they do like their beers and coffees as well. And, they say there's good potential with Dutch Bros. So hopefully we'll get some over here. Now, like I say, this is a little bit of a speculative play, but I think it's going to be a long-term future as well. So this is a good thing to look out for. And we're dipping our toes into the financial markets, and that is with Robinhood. Okay, Robinhood Markets. I brought 0.3 shares. That's at £19.07. It's actually up to £20.94. And, since watching a film, I forget what it's called. I think it's Dumb. Is it Dumb Money? Somebody can comment down below if I'm right or not. I think it is Dumb Money, and how the GameStop stuff happened. And I was kind of a bit cautious about the stock. But having a look at their stuff, like the fundamentals, how they're growing a user base, and expanding their products for people to invest in, I kind of thought this was actually a really good stock to actually invest in now, because their fundamentals are amazing. And for me, I always look at fundamentals because that helps you understand that the company will last forever, hopefully, and keep on growing. So Robinhood is in my portfolio now. and those are all pretty much, I think, in my stock and share ISAs, but we'll cover that in a moment. Next one is Rocket Lab. I'm a big fan of Rocket Lab. It doesn't seem like it with my little value position, but this is because I'm using my cashback from my card to invest into the stock. So every time I pay something on my card, it will go into Rocket Lab, and my spare change from the purchase will also go in that as well. So I bought 0.07 shares with the cashback. That equated to £6.57 quid. Now we've got total shares of 0.13, got total invested of £9.52, but the value is actually up by 13.87. Now the reasons why I love Rocket Lab is because it's growing its launch portfolio, its long-term space industry exposure, but it's also one of the few serious SpaceX competitors. I can't actually speak English. One of the few serious SpaceX competitors, which I think are going to challenge SpaceX. And those are my 3 reasons why I think Rocket Lab is going to be one of the best stocks, I think, even in the future. What's the point investing in SpaceX with this trillion dollar IPO, which is just going to probably fall down, reset, and then go back up, when it's a stock like this that is worth investing in? And another one that uses my cashback is Helium 1. Now, this is very much a moonshot allocation. You know, it is an ultra expensive penny stock, but it's a tiny position for me for fun. You know, if it hits, it hits. If not, oh well. But for me, I had a look at its fundamentals. I had a look at its projects of what it's trying to do. It's a helium extractive company, so it takes helium out of the ground and produces it, and you know, does all its bits and bobs. I won't go into all details of it. If you do want me to see and go into it all, then of course I will do a video on that. But basically, it's an opportunity, I think, to invest in hopefully one of the best UK stocks that will probably hopefully do well in the helium sector. So we brought over 1,773 shares, a total amount of £10.52. We've got over 2,000 shares now, invested of £10.46. That's a little bit wrong. I need to change that. But total value is £11.23. I need to update it because it's actually a little bit more. That slipped through my editing PowerPoint, but we have got quite a bit more invested into that. But I know the value is at £11.23 because we are down quite a bit on Helium 1. So I will put a little edit on the video where we'll, or in the description, where I tell you the actual invested in there. But like I say, it's only a small speculative play. I'm not really fussed about it. I'm not really checking on it every single day. It is what it is. Now, here's another one. Is Jeppy that goes into my cashback. Now I've got 0.91 shares brought for £16.57. I've got total shares now of over 1 or over 1.07 shares. Total invested is £19.50, and the total value is at £19.23. And I'm going to do a little bit of something fun, or have been anyway. I've been having a look and seeing what's out there, any opportunities, and I stumbled across my favourite team, Manchester United. I am a big Man United fan on the stock market, and that gave me a question: is investing in sports stocks worth it? So I'm going to let's see and give it a good try, because in my eyes, football isn't just for matchday scarves and half-time pies. It could also be an investment opportunity then. But like I say, this is not financial advice, so please do your own research. All content is for educational and entertainment purposes only, because investing always involves risk, and you can always lose your money. Please, past performance does not guarantee future results, so please do not copy just because I say that. So please just do your own research. But why am I experimenting with them? Well, to me, they're fun to track. They add personality to my portfolio, and because they're tied to clubs that I like, and like I follow, and like I love and adore, especially Man United. So, the clubs I brought is Manchester United, of course. I put £4 in, and I've done another pie, the trading 212. So if you want to do copy this, then of course the link is in the description. But please do your own research. Like I say, I'm going to keep banging on with it because this isn't things that are the best things to follow, it seems like, in terms of investing, because they do go up, they do go down. So please, please, please do your own research. This is just a test and try. A little bit of fun for me, indeed. But we bought 0.26 shares at £4. It's actually valued now at £4.15. We've got Celtic, brought 0.635 shares, a total amount of £1.50. It's actually down only by a pence to £1.49. We've got Ajax, 0.2 shares at £1.50. As you can see, it's actually the same value, haven't won or gained. Got Benfica, once again, 0.239 shares, same amount at £1.50. No value lost or gained there. And we've got Borussia Dortmund at 0.55. These are the only ones that actually pay dividend. And as you can see, it's actually down by pence. But we are going to see, and if you wanted me to do a separate video on all these football stocks and see how they keep doing in months and months of time, then we will definitely do so. But like I say, comment down below, and I want to hear all your feedback from all these positions and stocks, but also any opportunities that you want me to have a look at. So, like I say, about scaling back my eToro portfolio, I did cover it slightly about the new AI direction is aimed at me, especially long-term investors. But like I say, I'm not trying to build bots or run like this quant strategy, which eToro are trying to push. I'm just building a simple, realistic, everyday UK portfolio. So for me, the platform direction and my direction no longer match. So that's why I'm scaling back in Toro, which is a shame because I was one of the big hype people and loved the company when it first came out. I really pushed people to go on there because I just loved what they were doing. But it just kind of seems like they've lost their way with AI a little bit, and it just kind of means they just focus more on that. And it just feels like they've lost a touch for investors. It is my opinion. It doesn't mean the company's bad or anything. So please just don't go and do that decision based on me. You might find eToro is better for you than trading 212 or vice versa. But I am going to train 212 a lot more now. So you'll probably see that featured more on my channel instead of just having the eToro section. So we'll go to the worst performing stock, and that is Tesco's. It's actually down by 7.14%. It takes the worst performing stock of the month. And the best stock, that is right, it was Robinhood. It's a new addition, but it actually went up by 9.96%, which was quite good for a new stock. As we can see, the trading 212 ISA return. So like I say, it's £2 a day challenge, but at a minute we can't actually do that due to my own reasonings of life. So we're doing it as like a spare cash challenge at the minute to just see what we can invest in, see how it's good. And as you can see, Main Street Capital is down, Fuser is up. In total, my ISA is actually valued at £153.37. On the right hand side, you can see all the investments there. If you want to pause it, see what they are at, green or red, exactly how much they're in. They are going to keep growing and growing and growing, but we will get there indeed. So, as you can see, trading to invest in cashback. As you can see, we've got the cashback bit. So we've got the Helium 1 Global. There you go, it's at 11.23. So the investment is just about £12 something, £13 something. Rocket Lab is up. It's actually valued at £45.02. That's my investor account with the cashback. Got £7.80 in cashback holdings for spare change, and £11.56 from its cashback. Dividends received, so we received £6.19 from Carnival and only 8p from Main. There's the cash interest. So we've got 56p all time from the invest cash interest, but we actually got 19p from May. And of course, we only got 3p from the ISA cash interest, which is only 7p all time. For the portfolio tracker and the dividend tracker, I use stock events. If you do want to copy that, again, of course, use it down in the description. I'm not sponsored by them, but I absolutely love the app. And I just think it's one of the best apps to do to track your dividends and your portfolio instead of having to go everywhere and log in each time to your investing app. So, as we can see, the total buys and sells, it does say March. I do apologise. It should be May. I've had an absolute melt of a time trying to edit this. But as you can see, we bought over £143 worth of buys. We sold over £323 worth of stock. which is actually a gain of £179. Not all of it has gone into the new editions. I've kind of left the cash on the side, just for any other opportunities. So I don't want to just keep investing large amounts in. It's not realistic because not everyone can do it, especially if you guys watching and you're living paycheck by paycheck. I want you guys to feel a little bit of connection where you've only been able to invest 10 or 20 quid a month. I kind of want to try and keep doing that. Of course, there'll probably be times where I see a good opportunity and I'll probably invest a lot more into it. So like I say, if you want to copy the pie, link down in the description. You've got the 2-day dollar challenge. I'll put the bonus cash one and I'll put the football club one as well, all down in the description if you want to go and check them out and invest for yourselves in them. There's reasons why I started the pie. If you want to pause it, just basically saying keep it relatable with investing spare cash. After each payday, then aiming to put at least £2 a day into the pie. But that's pretty much it. So if you enjoyed the breakdown of my buys and sells, please hit the like button. If you hit the subscribe button as well, it just supports the channel out. And if this video hits 10 likes, I'll make another one next month, just like this, for you guys to see. But thank you guys for tuning in. Thank you guys for watching, and I'll see you on the next one. Goodbye.